Recording started. So once again, welcome you all to Dominator Learning Academy. So our objective is learning path of pedagogy. So our learning path, week one. So we're gonna complete with basic of market, introduction, candlesticks, chart patterns, support and resistance. Second week, I'll be taking you all through price action part one, price action part two, because it's a very lengthy topic, so which we will not be able to complete it one single day. So usually it might take 3 to 4 days as well. So price action part one and part two. Okay. So every day I'll be taking only 1 hour class, that is from 8 o'clock to 9 o'clock. So since this is the first day, so I don't want to stress you people. So I'll be completing it max by 8:30. Okay, for the first day. So from tomorrow, it will be for 1 hour. Okay. So indicators part one and part two. So this as well, it can take up to 3 days as well, or 3 to 4 days as well. So week three, future and option and strategies by industries experts. And week four, risk management. And next is the query session. Okay. Risk management and the query session. So next. So live classes, recorded sessions will be posting once the class ends. So by if at all if the class ends at 9 o'clock, so we'll be posting the recorded video at 9:30 or 10 o'clock max. Okay. So hands-on learning experiences. So solution for all your queries. So next, coming to the topic. So this is the introduction. This is a part one. So we have another introduction, that is part two. So yeah, today I'll be taking you all through the part one, the stock market in a nutshell. So what is stock market? Stock market in a nutshell means you know this nuts, right? Not coconuts. I'm talking about groundnuts. So just if you open a nut, so you can find. That's how that's the market. That's it. In simple. In simple, I'm gonna explain you what is market today. Okay. Objectives. It's a 1 hour session. So what is stock market? Different types of companies. What is an IPO? Difference between primary and secondary market. What are different segments of stock market? Different types of trading. So usually one who is from a commerce background, like one who has completed his BCom or whatever you call in your locality, I don't know. So BCom or commerce background. So MBA, Masters of Business Administration. So there they would have already discussed all this. So this is a basic what I'm teaching completely. For another 3 to 4 days, there will be only basic sessions. So one who has knowledge about it, I request, please don't mind, okay? Because people wants to be too fast. But at the same time, you think that this is just refreshing your knowledge. You're just going back to your BCom or your MBA. Okay. Yeah. So what is stock market? The stock market or equity market or share market is an aggregation of buyers and sellers of stocks, which represents ownership claims on businesses. These may include securities listed on a public stock exchange as well as a stock that is only traded privately. That I'll explain in depth. So when it comes to private different types of companies, the private limited and the public limited. So here it's aggression between the buyers and the sellers of a stock. Means today you might have seen. Today you might have seen. So since a week, the market was falling. Since a week, sorry, market was moving up. Let me just show. Yeah, yeah. Just a minute. Manish ji, just trying to open trading view. I don't know why the server is down actually. Ah, see, the market was moving up. So suddenly, the market came down since yesterday. That's on 5th. Because it's an aggression between the buyers and the sellers. Here, the buyers were aggressive, means they were dominating. They were dominating the sellers. So that's the reason the market started moving up. Here, the sellers started dominating the market. So it came down. So today, I think you might have seen my analysis, if I'm not wrong. So I had marked here, right? I had marked here. So it has to come touch. So this will be the target. So let me just show you that. See, I had shared you this image on the group today. Yes, sir, updated today. Yes, you're right. So here, I clearly marked that it can come touch this level maximum, right? See, download option, like I didn't get you. I'll share this chart to you. Not an issue. See, exactly it came, it touched this level, right? So that's called analysis. So that analysis I'll be teaching you in the next upcoming days. But here, what we are looking at is, see, once it came here, here the profit booking started. Here the profit booking started. See the time exactly 2:30. So here the market started reversing. So that's called profit booking. So that's called the sellers they are starting to buy it back. They have they had already sold here, fifth. Okay, they had already sold here. Now they have to buy them back. Buy them back. So that's the reason you might have heard about Hero Zero, the levels what we provide, Hero Zero levels. So sometimes we provide in the morning itself. So sometimes usually at 2:30, 3 o'clock. The secret is nothing. It's very simple. The profit booking starts at that particular time. See, timing 2:30 to 3 o'clock. 2:30 to 3 o'clock, maximum time. So there exactly what happens, market will start booking the profit because what happens, there will be some glitches at the time of closing. So the big players or the pro players, they don't want to take risk. So here the aggression changed. Here the aggression changed. Means the sellers turned to be a buyers. So then immediately the market started buying up. Now that is aggression between the buyers and sellers. So that will be too advanced if at all if I talk about the hero zero, then I'll be teaching you once the chart pattern is completed. Okay. So this chart I'm gonna share it to you. You are asking for the chart to download, right? मुकेश जी सर डाउनलोड ऑप्शन नहीं आ रहा है डाउनलोड ऑप्शन ऑफ द चार्ट you are asking I've shared it on 20th batch. Okay. Okay, so fine. So that's a aggression between the buyers and sellers of stocks, which represent ownership claims of businesses. Next is different types of companies. So here we have two types of companies. One is private limited company and the public company. In private company, the difference is a private company is owned and traded privately. This will be owned and traded privately. A public company is owned and traded publicly on the stock exchanges. There is a rule like there should be minimum of 7 members, board members, to incorporate a private limited company board members. So maximum of 50. The maximum shareholders will be 50. So in public company, it's a number of people because there are shareholders. So it's a public limited company. They're gonna come up with the IPO, initial public offering. So that I'll explain. So we have what is IPO here. The next. So with the help of IPO, so they'll get the funding from the public. So they'll start their company. So when IPO comes, I'm going to explain. Private limited can be used after the private company name. Limited can be used after the public company name. Okay. Just a minute, guys. Just a minute. So for private company to become public company, just a minute. So for a private company to become public company, the company can go through IPO, initial public offering. Public company has already gone through an IPO. Public subscription of shares is not allowed in private company. Means in private company, the shares should be transacted between those members only, those board members only, not outside person. Now, suppose if at all, if I wanted to buy those shares, no, all the 50 members should agree. The maximum 15 members. No, all 7 members, minimum 7 members should agree that yes, we can take him into the board. So public subscription of shares is allowed in public company. Means you can, I can, anyone can. Okay. So previously, where if at all any company wants to come up with IPO, so they were supposed to go to the banks usually. So there will be allocation forms. So we have to fill those forms. We have to pay some funds to the bank. Then based on that, it used to get allocated. But since there was huge fraud which was going on, so one particular person would have applied for 1,000 shares, another person would have applied for 100 shares. So who was applied for 1,000 shares used to get the maximum number of shares. One who has applied for 100 shares, if at all, if it is available, then only they used to give. If not, the number of shares, more number of shares who has applied for, only that person used to get the actual, because they didn't have the system, the computer system, whatever, to allocate the shares. Now everything is allocated randomly with the help of system. We will be applying the IPO, so everything is in the hands of SEBI. So only these people will get it listed. That's it. So they will come. See, for example, Reliance Industries. So they will come. They want to go through an IPO. Yes. So they want a public fund. They want to raise public fund. So previously we were supposed to pay the amount in prior to the banks, but not. Yes, yes, yes. No problem. Yes. But now not that's the case. Now brokers, Angel, Grow, so everybody will have their own. So with the help of these brokers, we can apply for the shares. So suppose if I have applied for one lot will contain some 50 shares, say for example. So another person would have applied for some 5 lots, 250 shares. Another person would have applied for 10 lots or 500 shares. So similarly, it will be allocated based on whatever you have paid. Like for example, you have paid the amount of some, say for example, 2 lakhs initially itself for number of shares, whatever the number of shares you want. That is advance payment. So it is transparent. Transparency is there. So the SEBI can check who got maximum shares, who got lesser shares. So whoever applied first come, first serve. On that basis, now the shares are getting allocated. Previously, that was not the case. Previously, the case was different. One who has applied more number of shares, 1,000 shares, 2,000 shares, 3,000 shares, that person used to get that particular lots allocated. So that's unfair. So unfair practice was there previously. So that's the reason now there is a huge involvement from the SEBI governing. Okay. So NSE BSE is also working upon. So IPO stands for initial public offering. It is a process by which a private company can go public by sale of its stocks to general public. It could be a new young company or an old company which decides to be listed on an exchange and hence goes public. Companies can raise equity capital with the help of an IPO by issuing new shares to the public, or the existing shareholders can sell their shares to the public without raising any fresh capital. Any fresh capital. So any companies which are listed, all the companies have gone through IPO. So example Titan, Reliance, HUL, Hindustan Unilever Limited, or say any companies which is listed here. So whatever the number of companies you want to Trent, okay, Tata Motors, all the companies would have gone through an IPO, initial public offering. So you may ask, sir, how to apply for an IPO? So I told you the brokers will keep on giving an advertisements that particular company is coming up with an IPO. So if at all if you're interested, you can apply. So this is the minimum amount what you need to pay. So that's so how to identify that particular companies go will gonna work well or not. So we're gonna see the mother company. See for example the Trent, it's a Tata again. Okay. So TCS, it's a Tata again. So mother company is what, which company owns what. Okay. So this is one way. Another way is by the debt with the asset. So if they have more debt, better to avoid. So I don't tell if there is more debt, some uh, companies will not. See, for example, Adani. So they have more debt than their assets, but still they are able to stand in the market. But I don't tell all the companies will be standing the same way how the Adani is working on. So it's highly impossible. Understood? It's highly impossible. So that's the reason if you are a safe player, first, second thing what you need to say is debt means whatever the money they have raised or whatever the money they have borrowed from the general public or general the banks, financial institutions, whatever the assets they are carrying. Two things. Okay. So generally, IPO, initial public offering, it doesn't mean that anybody can come get it listed. See, for example, if they have raised a capital of 100 CR, they have raised a capital of 100 CR, that 100 crores. So out of 100 crores, there is a minimum cap of 50%. 50 crores should be definitely raised from the general public. If there is a 1 rupee or even 2 rupees lesser than that, then this particular listing will not happen. Minimum 50%. Then rest they'll get a time of 1 year for next 25%. So they can raise capital from the general public after listing because people will keep on buying shares. If at all if that company is performing well, so they'll keep on buying that shares. So by that way, another 25%. So another 1 year will be extended for next 25 CR. So that's how it works. I'm just giving you an example because see, usually they'll be raising 1 million, sorry, 1 billion, that is 1000 CR, 2000 CR, 3000 CR, 4000 CR, 10,000 CR, 20,000 CR. So this way, the capital will be raised. I'll just give you an example of 100 CR. Okay. So difference between primary and secondary market. So what is the primary market? What is the secondary market? The primary market is where securities are created. The secondary market is commonly referred to as a stock market, means IPO. Primary market is an IPO. An initial public offering or IPO is an example of primary market. In secondary market, investors trade among themselves. Like we buy, you sell, I buy. So between the traders, opportunity for investors to buy securities of new public companies through bank and another other financial institutes. Okay, now it's completely different because there's no work for bank or banks. So only financial institutes like which is it? Angel brokers. So Angel One, Zeroda, Zeroda or Grow, Upstocks. So these have already taken over. So whatever you want to apply, so you can apply directly through this brokers. So investors trade previously issued securities without the issuing company's involvement. They'll have no involvement with the issuing company. Say for example, HUL, Hindustan Unilever Limited, has issued a shares that will be listed in the market. I am holding the share of some 100. So I'm gonna sell it. 20 or 30 shares I'm gonna sell it. So you buy. So there's no involvement between me and the company, HUL company. So they have listed, they have already issued the shares. I'm holding it. So the transaction between will be between me and you. That's it. What are the different segments of stock market? Different segments of stock market. It's same thing repeated twice. Okay. Different segments of stock markets. Capital market, equity futures, options, currencies, or forex, or commodities. So in simple, I'm going to explain actually. So if anybody facing some network issues like buffering or audio issue and all, so I think you people might have connected through your mobile phones or your 4G or 5G connections. So that's the reason you might be facing. Sorry. So whoever texted, Akash. So that's because of your just because of your internet. So please increase your speed, internet speed. Okay. Yes. Pradeep. Sorry, I didn't see your. It's your internet. So I didn't see your messages. Sorry. So I'm going to explain you what is a child. So I've just shared a screenshot on Telegram 20th batch. Just open that. So by that time I'll try to open it here. Yes. See, we can see EQ, the other one is future, another one is option, OPT, right? Yes, you're able to see EQ, that is equity, future, and option. Just a minute. Yes. So EQ is equity, this capital market. Okay. Equity feature is this equity future. This is a monthly expiry. So this has no expiry. So this has monthly expiry. So this also has a monthly expiry. But here there is a decay, but not to that extent. Okay. But here, complete decay. This 425, see here. Now it is somewhere near to 1.15. So this can become 425 and this can become 1.15 based on the changes here. If at all, if it comes 400 points false, so this is gone. This will be 1.15 and this will be 432 or something, 450 or something. So this is options, highly risky. Features, okay, risky. This is only 10% risk I can tell. Okay. So that is capital market, equity futures and options. Now comes the currencies. The currencies are forex. Forex is the one. So here it is completely banned actually. So pairing of forex. Previously they had allowed actually. So with USD, with INR and INR to SGD, SGD Singapore dollar, yen. So whatever. Okay. So we were able to pair the currencies and trade. So that is currency market. Now RBI has made a clear rule that nobody will be trading in forex market. So if at all if you are interested, you can go to Dubai to trade there. Okay, next comes the commodities. So commodities. So as you all know, I think everybody knows, but still I'm just explaining. So we call it as MCX as well. So this is the commodity market. Here we trade crude oil, okay, crude oil M. So natural gas. Just show you. Yeah, here MCX metal, energy, gold, silver, aluminum, copper, lead, zinc, crude oil, natural gas. So these are commodity market. So this usually opens at 9:15 and closes at 11:30. Previously it was 11:45. Now they have reduced time by 15 minutes. So even now if you open natural gas, so it will be working. It will be still moving up and down. So there will be momentum even in silver, even in copper, gold, so zinc, whatever. So you can just check with your whatever the brokers you have. Okay, see 2,56,673. This keeps on changing. See, in one single day, it has given a momentum of about oh my god, 8,000 points in one single day. 8,000 points up. So that's silver. Oh, actually, they had predicted silver can go up to 250 and 350 as well. Now it has already touched 250. So next target is about 300 and 350. So if you have some good sum of money, you can invest in silver. Hmm, reached 250. So last, I think 4 or 5 days before when I saw it was 225. So now it has gone up to 25 points. So another 100 points is left out. So let's see. So this is silver. So this is commodity. Okay. So these are commodity markets. So this will be traded up to till 11:30. So till 11:30 you can trade. Okay. So next comes different types of trading. So I'll end it today. So rest I'll continue tomorrow. We have another in this case study. I'll take it tomorrow. So we have another 10 minutes to go. So let's finish it up. Okay. Different types of trading. Traders buy and sell the stock on the same day. So that is called intraday, like what we do. Okay. Traders sell the shares even without holding them. He sells first and later buys the share before the end of the trading session. So that is short sell. Next comes delivery trading. Delivery trading is we're gonna hold it for 1 week, 2 weeks, 3 weeks, or 4 weeks. Short sell means we know a particular share can fall. See, for example, once it touches this level, so if we know that this can fall, so we can sell the nifty here. Sell the nifty here. So what might be the profit that we could have made is that 237 points. 237 points is the profit. So if at all if we had known that Nifty can fall within 2 or 3 days. Yesterday, if we had sold, so 237 points we could have made today. So this is called selling. So without even buying, initially itself we're gonna sell. Then when it comes down, we're gonna buy it back. See, for example, let's take an example of Dixon. Dixon, suppose it was trading at yesterday, it was trading at 12,236. So we sold here. So you may ask, so how can we sell without buying? Yes, you can sell. You can sell. No doubt in that. You can sell. So when it comes down, we're gonna buy. Means when you sell in the initial itself. So we know that this can fall. We make money. But there is a unlimited loss which can occur. See, for example, if we sold at 26,300, say for example, 26,370, expecting that it can fall. What if suppose it moves up? What if it suppose moves up to 27,000 or 27,500 in one single day? Don't tell it has not given movement. It has given movement. Well, so this can lead to unlimited loss if we had sold. Okay. But again, it's a limited gain. Means, see, for example, we sold at 12,222. So maximum it can become zero. So 12,234 is our profit. That's it. But if we sell, if it moves up, so it can go up to say for example 30,000, 40,000, 50,000, 1 lakh, 1 lakh, 2 lakhs, 3 lakhs, so whatever. If it goes, if at all if it goes, then we'll be under loss. That is unlimited loss. So that's the reason one who is a seller needs a huge margin. One who is a buyer, he just needs a capital. That's it. Whatever the money he has, he can buy. But for selling, we need huge capital, huge margin. Without margin account, we can't trade and we can't be a seller. Okay. So next comes BTST. It's buy today, sell tomorrow. We're gonna hold it for one day. We know that the next day it can open a gap down or gap up. So that is BTST. Buy today, sell tomorrow. The next comes is sell today, buy tomorrow. We becoming a seller for one day. We sell today and buy it back tomorrow, expecting it can be a downfall the very next day, or it can open a gap down. So that is trader sell today and buy back tomorrow. And next is margin trading. Traders needs to pay the initial margin to trader in the options and futures. The margin is predetermined by SEBI. Previously, you might have seen uh, 7x margin, 10x margin, 20x margin. Have you heard? The brokers were giving a margin of more than five times. Suppose if you have a capital of 1 lakh, the brokers used to give 5 lakhs. So you can trade up to 5 lakhs. But the only disadvantage is that the retailers, the poor people, retailers are poor people. So they'll have a capital of, say, for example, 10,000. So they'll be getting a margin of 1 lakh. So with the help of 1 lakh, they're going to start trading. But there is something called as capping. So with that capping, what happens? If at all, if they reach 10%, the 10,000 is gone. 10,000 is gone. Whatever the capital they had, it is gone. So you have seen the volatility in the market. So based on the volatility, we'll not be able to hold a particular Sensex or the Nifty for a while. So either 1 point, 2 point, 3 point, we need to make profit and get out of the market. As soon as you entered, if it comes down even 1 point, 2 points, gone. So we were supposed to get out of the market by making loss, a huge loss. 10,000 for 10,000 gone, all 10,000 vanished. So that's the reason they made a predetermined, like I didn't get. Okay, ji, I'll help you out. Please wait. After the market, you call me. Sorry, after the classes, you call me. Okay. So I'll help you out how to do it. Don't be tensed. So yes, so margin trading. So now, in respect of the retailers, so huge retailers were making huge losses because everybody wants to be a rich kid within one day. So everybody wants to be rich. So they used to invest 10,000 and trade at 7 times, 10 times. With the help of 10,000, they're gonna buy for 1 lakh. A small 1 point or 2 points down, gone. Everything is vanished. So now they have given only 2 times. So for example, if you have a capital of 1 lakh, so you can trade up to 2 lakhs. That's all. That's the maximum. Okay. So that is margin account. So basics for share market, like does anybody know when was the NSE found? I mean incorporated. When was BSE incorporated? Or Nifty index was created. Bank Nifty index was created. Any idea? Everybody opened their Google now. फटाफट करके अभी टाइप कर रहा है. When was NSE found? When was I not? Just okay. You just open your Google. Let it be interactive. Just message on the chat box. Year of NSE. Okay, great. It's 1875. So BSE. That is BSE on 9th July 1875. We also call it as Dalal Street, Mumbai. So it has a Asia's first and the fastest stock exchange in the world with the speed of 6 microseconds and one of India's leading exchange groups. Okay. The next is NSE 1992. Okay. Recognized as a stock exchange by SEBI in April 1993 and commenced operations in 1994 with the launch of a wholesale debt market, followed shortly after by the launch of the cash market segment. So one more question I asked you people. So it was Nifty created. So what was the price when Nifty was created? When was the Bank Nifty created? Just a general knowledge question. So you can just check with the Sensex as well or whatever. Okay, CNX Nifty, whatever. Just these were the basics previously where we used to trade. So what was the base price? 1,000 points. Yes, on 1,000 points now. What's Nifty today? From 1,000 to, yes, perfect. So free float market capitalization weighted index. So you may ask, what is this, sir? The index was initially calculated on a full market capitalization methodology. Now it has been changed to free float market capitalization weighted index. So previously we used to get a petrol for 50 rupees per liter. Do you remember? After subsidy, we used to get for 50 rupees. Even before that, 20 rupees, 25 rupees. Later part, when Modi ji came, now he's using free float market capitalization weighted index based on the crude oil price. So now the price will keep on varying based on the crude price of international market. So based on the international market, what the price of a crude oil decided, the same thing will be decided for the petrol price here. So 106, sometime 101, sometime 102, sometimes 99. Again, it will go back to 106. Have you noticed this? Petrol prices in India. Previously, that was not the case. Yes or no? Yes. So the base price was 1000 when it was created. Okay. But now it is 26,200. Imagine a span of 20 years. Sorry, 30 years. In a span of 30 years, it has reached 26,200. It's a 2.6 trillion. 2.6 trillion base capital of 2.6 trillion. So Bank Nifty as well. So the base date of 1st Jan 2000 index to base value of 1000, wherein the level of the index reflects total free float market value of all the stocks in the index relative to a particular base market capitalization value. So this case study I'll explain tomorrow. So this is again taking some another. Okay, I'll explain it today itself. Okay, let's finish up. So tomorrow we can go with the fresh. We have another part two to be completed. So I'm just explaining what is an opportunity. Okay, so how the opportunity should be used. So not only stock market as well in your general life, your personal life, in your professional life as well. Opportunity knocks a door only once. So we have to make use of the opportunity. But Dhirubhai Ambani was making the opportunity to come in his way. Okay, so that's and he the opportunity also knocked at his door as well. So he has utilized both together. So I'm just giving an example of Dhirubhai Ambani at Bombay dyeing case. Okay, so Dhirubhai Ambani and sons were into polyester business previously. They were into polyester, polyester, similar to the cotton. So that's a type of cloth, polysters. It's a fabric, yes, it's a fabric, correct. So polyester. So Bombay dyeing was actually into dye making. You know dye making, right? There is a cotton cloth, say for example. So for that cotton cloth, how do you get color with the help of coloring the cloth? That is called dye. Dyeing. They call it as dyeing. So that dye manufacturer was a whole and sole Bombay dyeing only, and a desired color, whichever color. Suppose if you are wearing whichever color you have, that will be completely into white. The color changes with the help of dye only. That is permanent dye. Okay. So they imported this machinery of manufacturing dye to the Bombay dyeing company. Say for example, I'm just giving a rough figure of say for example 2 crores. It's a rough figure. It can be more than that or lesser than that as well. Just giving an example. It can be 2 crores because the machinery is about 1 crore and the customs what they paid is another 1 crore because 100% the machineries whatever you import from the other country is 100% duty what we need to pay. Okay, 100%. Just a minute, guys. Just a minute. Sorry. Uh, so they were into dye manufacturing. So the import duty was 100%. So even today as well, it is about 100% only. So there was one loophole in the customs. So this Dhirubhai Ambani utilized that to the full extent. Like if you purchase a machinery or if you import it as a scrap, it is free. There's no cost for you don't have to pay a single rupee of customs because that's a scrap. Because we are a developing country, so we are just getting we'll be using it as a scrap. Means we'll be using the parts only the parts, or we'll be converting it into, or we'll be completely destroying that machine and we'll be changing the module of that machine, whatever, or we'll be what do you call it, melt that machine to manufacture a different machine, or we'll be using it for some other vehicles as well. Okay, so anything which you import as a scrap is a duty free. The customs consider it as a duty free. So this loophole he identified, and he bought a machinery, die making machinery in Germany, and he stored that machine in a godown for 1 year. So after 1 year, if you get that machinery, so that is used machinery. It's a scrap machinery. So he just showed the bill that this machinery was bought the year so and so. So 2024. So now I'm just importing it as a scrap machine. So duty free. So Bombay dyeing, suppose say for example, it was giving the same dye for 1 kg for 200 rupees. Dhirubhai Ambani started giving it at 100 rupees, 50%. So there he penetrated the market and he captured the whole market. So by the time Bombay Dyeing came to know that this was a loophole, it was about 4 to 5 years. By the time he had already captured, he had already made money. So he was just thinking of changing it to some Reliance or something else, to invest in Reliance or somewhere else. Got it. So bed sheets usually. So you might have seen the bedspreads usually comes from Bombay Dyeing. It's a beautiful company. I can tell. A good fabric they use. But ultimately, they started manufacturing the whatever, the bed sheets or bedspreads, fabrics, whatever. But they completely stopped dye making business. So that's how he was able to vanish, destroy that particular company. So that's opportunity what he used. Okay. So similarly, whenever you get an opportunity, don't see front and back. Take a move. Even your personal life, professional life, or even your general life, whatever. Take a proper decision and make use of it immediately. Because always opportunity doesn't knock your door again and again, again and again. Right. So today we knew that the market can fall definitely. So many people were scared to invest in Hero Zero, but I particularly invested, so made some good money out of it. So I entered at 17, so exited at about 39 rupees or something. So some 2,50,000. So that opportunity, only once the opportunity knocks the door, right? So that's the example I just gave. Okay, guys. So exactly we finished today's syllabus. So tomorrow we'll have a discussion on part 2. Okay. So you have any doubts on this? Any doubts? Okay. So let's continue tomorrow. Okay. So I'll share the video to you. I mean the recording to you by 9:30. Okay. So fine, guys. So let's meet up tomorrow. Yeah, bye bye.